All right, welcome everyone. Good morning. You are tuned into Daily Mortgage Rates Live with the Mortgage Calculator. We're going to wait just a few minutes to get started so we can go live on all the different platforms and we can give everybody a chance to jump on. So please hang tight. Appreciate everybody being on here early. Let's give everybody a couple minutes here. We can throw the comments there so you can drop a chat in the comments. We got those pulled up on the screen for those of you tuning in. I see some people are already commenting, but feel free to drop a comment in the chat. There we go. Jason, Taryn, good morning. Good morning, everyone. Today we have a great topic to discuss. Definitely something very different, very outside the box. I'm sure a lot of you probably don't know that these products exist. And so it's something really cool that we're going to go over here today. But again, we're just waiting a couple minutes here to get live on all the different platforms. So we are ready to go. All right, some more people dropping comments in the chat. Good morning, everyone. Some of you earlier morning than others for those of you on the West Coast. All right, looks like we are live on all the different platforms so we can get started. We'll go ahead and take the chat off there and we will get it going. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. Now, one of these type of non-QM loans that we do is the CDFI, no ratio, owner occupied loans, which we're going to do a deep dive into today. So every day on the show, we go through the live rates and we do a deep dive into a different topic, which today we will go through the CDFI no ratio loans, a very special program. So we'll have Jose do a deep dive into that later. But first, like we do every morning, we'll go ahead and pull up our pricing tool and we will check out the actual rates that are going on today in the market. So Nick, why don't you go ahead and take over the screen, pull up the pricing tool, and let's check out the rates for today.
All right, thank you, sir. Let me go ahead and switch my screen and we will get started. So, as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We have over 300 licensed loan officers, and we're licensed in 22 states for primary, second homes. And we can do our business purpose loans, our DSCR loans we love to do in 44 states. So if you'd like a full loan estimate with a full breakdown, please get with one of our team members. We're going to check out the general pricing for today, which will show us the general rates and the APRs for those programs. But you can always get a full detailed breakdown. So we're going to go through a couple basic scenarios. We're going to set up the same parameters for all the different loan programs. First off, we'll set a loan amount of $400,000. We will set our LTV to 80% loan to value, 20% down payment. We will set our desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. That is the typical request since the rates are a little bit higher than normal. Most people are asking for a small buy down. We will compare our loan types. First, we'll go through our conforming conventional rates. Then we'll check out our FHA rates today. And then we will go into our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs with alternative income qualifications. We don't do the VA loans live every morning since that's only for our eligible veterans. So if you are eligible, we appreciate your service and would be happy to give you a full quote. But since not everybody is, we don't do that live. Same with USDA, that's only for eligible property. So if you are in the USDA eligible area and happen to be shopping for one of those, please let us know and we would be happy to quote it. But not everybody is. So let's start with our first example here, conforming conventional. We're going to set it as a purchase, 30-year fixed loan, standard loan, primary occupancy, single family property, one unit, state of Florida, county Miami-Dade. Estimated FICO will set at 760 for all of our demos today. And our estimated debt to income ratio will set at 40 for all of our demos today. So let's check out our rates this morning. So that's a little bit of a weird one there. Still a good option. but for some reason it's showing with 0 discount points. So since we had a weird first hit, it's showing all the other ones around there, but this works. 7.125% for 0 discount points in cost for a final APR of 7.268. So we'll probably have some different options as well. Yeah, a little bit different options with a little bit different APR here within the sixes. Here's a good option to show real quick before we move on. 6.99 rate for 7.133 APR. Because the computer found a hit at 0 discount points, it threw this off a little bit from what we're used to. Now, let's go back and compare our FHA programs. So we'll set this back to 80% loan to value. Typically the second option for any borrower, if they don't qualify for some reason conforming, we'll go to FHA. FHA has a little bit more relaxed credit guidelines and a much higher DTI, debt to income ratio we can use. So typically this will be the second option we can use. Everything else will be set exactly the same. But let's check out our FHA options this morning. So it looks like rates are up a little bit on FHA as well. We have the best option here at the top, 6% rate for 0.875 discount points and costs, and a final APR of 6.598. So today and for the last few weeks, for sure, FHA in this scenario, a little bit cheaper for our borrower. So always recommend our borrowers that do qualify conventional, still check out FHA. And for our borrowers that don't qualify conventional, always check out FHA as a great next option. And use the APR to compare across, because FHA does have yearly mortgage insurance and upfront mortgage insurance. So we do impact that into the APR there, so you can compare across programs. Now, if for any reason a customer does not qualify for conventional or FHA, many other banks or lenders don't have any other options, but this is where we specialize here at the Mortgage Calculator. We have over 5,000 additional loan programs under expanded guidelines where we can use alternative income documentation. So we'll set everything else the same as the other scenarios, but we have a new option that pops up for non-QM for income verification. So let me scroll down. Typically, a full doc would be 2 years of tax return. So that's what we would have to use for conventional or FHA. So we would usually choose this version, a non-QM version, to use alternative income, such as 1 year alt doc, 2 year alt doc, using our assets only, no employment, using our business bank statements. Investor DSCR is very popular for investment properties, using our personal bank statements, 1099 programs, P&L programs, all these different options. But our most popular option by far is the personal bank statement 12-month option, and that's going to be for our self-employed borrowers. Many times our self-employed borrowers on their 2 years of tax returns have various write-offs and maybe not able to meet the income that they need for the house they're looking at. So they either don't qualify or need to qualify for more income. That's where we're able to use their actual cash in the bank, the latest 12 statements, to determine a debt to income ratio using those bank statements rather than their tax returns. So most self-employed borrowers will qualify for much more income and therefore a much higher loan amount using these methods. So let's check out our non-QM solutions for the borrowers who need a little bit more income here. So very comparable here to the conventional, since conventional went up a tad today as well. So the best option we have on the non-QM, great option using bank statements, 7.375 rate. Oh, actually this bottom one is a little bit cheaper, 7.375 rate for 0.875 discount points and costs, and a final APR of 7.451. So remember the conventional was just over 7. The FHA is just over 6.5 on the APR. And here we have our non-QM just under 7.5. So very comparable to compare all three. Definitely recommend you get with one of our teammates that can provide you the different options. And if you scroll down here, there's a ton of different, I would say, flavors of the bank statement program here. Some of these may allow things like credit events, like foreclosures, bankruptcies, things like that. Whereas obviously conventional doesn't allow that. So if you need something very special, we have hundreds of different options within the bank statement programs. So please get with our team. They'd be happy to do that for you. Now, let me go back to the quick pricer for our final examples today. So we always want to review our investment property rates live every morning. And we will set up the same scenario, 80% loan to value, 20% down payment. And we'll simply compare our investment property options. We can do conforming conventional, and we'll compare that to our non-QM expanded guidelines options. Remember, FHA, VA, USDA, not eligible for investment properties. So we'll simply compare these two as we do every morning. So first example here, we'll set this to conforming. Everything else will stay the same as our prior examples. We just changed it to investment property. So let's check out our investment property rates this morning. So here it looks like the best option the computer found for an investment property, 7% rate for 3 discount points and costs, and a final APR of 7.243. So remember, for investment properties, Fannie Mae and Freddie Mac, the entities that do conventional loans, have added loan level price adjustments for these products. So unfortunately, the computer is not able to find a rate with 1 discount point and cost. So even if we go up in rate, many of our investors would ask us to get a little bit higher rate for less discount points so they can save some money. But even as we go down here, as we do every morning, you'll see some other options. Here's a little bit lower, 7.5 rate for 2.875 discount points, 7.625 rate for 2.2 discount points. But either way, our investors want other options. That's where we love to present our non-QM options. So if investor qualifies for conventional, great. We would love to quote this for them. But especially with the higher discount points, we would always love to present our investment property, non-QM, aka expanded guideline options here. So we'll set up the same scenario. And for the final demo here, we have 2 new options. First, we have to set our income verification. As I briefly mentioned before, for investment properties, the DSCR income verification is by far the most popular. And that's because it doesn't actually require any income from the borrower, any employment from the borrower. We're simply going to use the rental income from the property to determine if that covers the mortgage expenses, the PITIA for the mortgage we're proposing. The DSCR ratio is calculated as a 1.00 if the rents can cover the expenses. Anything over 1.00 means the property cash flows. We also have options for a DSCR ratio under 1.00, meaning the property doesn't quite cash flow. So plenty of options here. For today's demo, we'll set this to 1.50, so we have all of the better options to look at. And we will set the prepayment penalty. Prepayment penalty is standard on all of our non-QM investment property programs. We will always set it to 3 years for our demo. We can choose 0. That will cost more money, limit the loan programs. So we don't do that in the demo, but if it's required, we can. And there is an option for 5 years, not as many loan programs for that option. So we don't quote that, but it is a little cheaper. We will always choose 3 years here for the demo since that is the most common. So let's check out our DSCR rates this morning. So very comparable here to conventional, as you can see. Since conventional jumped a little bit here, we're still about the same as we were yesterday on the non-QM DSCR. That's why we love to do these things. So great option here, 7.375 rate. You guys just saw a similar rate to conventional, but 0.85 discount points. So much less cost out of pocket for our investor. They have more cash to deploy into other investments, improvements, whatever they need to do. And you see here the final APR, 7.450. Very, very comparable within just a hair of conventional. And remember, no documentation, no employment documentation. We're simply going to use rental income. So our investors can do 1, 2, 5, 10 of these loans at a time to refinance 10 properties maybe and purchase more properties. So the opportunities are endless when you go with the DSCR program if you're an investor with multiple properties. So always recommend our investors take a look at the non-QM options to compare to the conventional. Especially today, you see they're almost identical. So definitely recommend everybody takes a very close look. Now, let me go ahead and introduce our topic again, since we have a few more people joined in. Let me switch my screen. And today's topic, we're going to pass it over to Jose here in a second. He's going to go over a very special program. Obviously, we're just talking about investors. This is not investors. This is a very unique program. The CDFI is a special program by the Treasury Department that allows a certain institution to do a loan for an underserved borrower. that may not actually have employment with no DTI ratio. So that's why we call it a no ratio loan. So no employment required and no income required on this. This allows borrowers who may be underserved or maybe transitioning and maybe don't qualify for conventional for various reasons, still need to live, right? Still need homes. So the government has created this program in order to allow institutions to essentially break some of the rules that used to require us to document income fully. So very specific program for very specific set of borrowers, but very cool option for people that do happen to be underserved and stuck in between, right? Maybe you're still employed, but you switched from, W-2 to 1099 or a gig economy type stuff. Everybody with the COVID has been in transition. So very popular program since a lot of transition has happened in the world. So if you're ready there, Jose, I'll go ahead and let you take over and explain a little bit more.
Yes. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. CDFI is another mind blower program because essentially we are circumventing the Dodd-Frank Act in having a primary and second home loan that is not verifying personal income to qualify the borrower. Dodd-Frank Act in 2010 is essentially, that is what they did. They required all primary and second home loans to have some type of income verification component, whether it be tax returns for full doc, bank statements for full doc, profit and loss for full doc, or asset depletion or asset verification for full doc. What we have here is a very unique program, very select, which is why it is only for primary and second homes. It is not for investors because, as Nick mentioned, it is really geared to serve the underserved communities that may not be getting the full exposure to lending programs out there. So similar to back in the days with the Community Reinvestment Acts that they did, well, this is something new, obviously not as aggressive as those previous programs that we had pre-Dodd-Frank Act, but very good on its own. So first option I have here is for a purchase, 20% down with a 780 credit score. Now, keep in mind, max 80% LTV. So yes, this is not a 3% down option by no means, but you wouldn't expect it to be that without verifying any income, nor without verifying a job for the borrower for both a primary or a second home. Minimum of 12 months reserves are required at the highest credit score tier, which is 740. So if you are 740 or above, you would be able to max it out at 80% loan to value and 12 months reserves. So yes, again, another component here, but you got to see they have to balance out the risk. So max 80% LTV and 12 months reserves. However, the reserves as well as the down payment, 100% of the funds for the transaction and for the reserves can come from a gift. So they give it, then they take it also. So here they're giving you back a little bit of the opportunity to get gifts for all the money. So this scenario here, you're looking at a rate of 8.625 at a cost of 13,000, which translating to points is 3.25 points. That is the best rate and lowest, not the lowest cost option, but the best rate option that you would have at a price at 3.25. I think any higher than 3.25 points may not be possible, but anything lower than that in rate is going to have an extra quarter point per 0.1% in rate. So this is with 780 credit, and keep in mind 740 is the cutoff for 80 for the 12 months of reserves and 20% down. So this example here has us with a 720 credit score. And then notice below 740 credit, the max LTV is reduced to 75% loan to value, and the reserves are increased to 15 months. Rate you're looking at is 8.75%, and the cost is the same, 3.25 points. And this is 720 score. And now we have an example with a 680 score. So in this scenario here, 680, you have 9% rate, and you have 24 months of reserves. So they are tightening the screws here as the risk factor increases with the score. This program used to be available with up down to 640 with just charging you 18 months reserves and the same 80% LTV, but obviously that was pre-pandemic. And then 640 credit score, which is their minimum credit score, nothing below that, is 35% down, and the reserves are still 24 months. So good example, good option here, but you do have to have a good down payment here. So if you manage to save up the money somehow, came into some money, get a gift, however you can do it, if you got the 24 months reserves and 640 credit, you're approved. And then giving you a refi option here. Our refi option here I'm providing is with the best credit score tier, which would be 740 or above. You're looking at 70% max loan to value on this. This is for a cash out. If you do the rate and term, that's a different LTV. But for the cash out, you're looking at 8.75% rate, 70% LTV, the same reserve requirement, 12 months, and you're looking at the same cost of 3.25 points. So again, very unique program, obviously not for everybody, but for those that can step up to the plate, bring that kind of a down payment and bring that kind of reserves to the table, you're approved.
All right. I don't see any questions in the chat, but I do have a question. So what kind of people would really be using this? I mean, we talked a little bit about it, but what would be some of the situation examples that this may come into handy for loan officers to be able to talk to their clients about?
Okay, that's a good point there, because remember, we are consultants and we do have to analyze the situation and see if the borrower can actually pay, regardless of what the guidelines say, right? The guidelines say no job required, no employment required. Okay, that's great, but that doesn't mean you're going to get somebody who has no income at all and put them into this program just because they have the credit score and the reserves. They do have to have, you do want to see what kind of ability to pay. So normally the options we've used is for example, people relocating, they got that job in the new market. They haven't started the new job. Maybe they don't have the new job yet, but it is going to happen. This is not somebody that is not going to be without employment for a long period of time. So that could be somebody who you would want to use this program for, which is usually difficult. We're able to do that in the agency world, usually, with the letter from the employer and all that kind of stuff. But if you don't have that yet, this could be an option for you. Or your self-employed borrower that doesn't have any way to show anything, or your crypto owner, right, that has a lot of money. Definitely you're moving money around. There's income per se, there's cash flow, but they just have no real way to document it. That's a very good way. This is a very good program for them. We've used this. Nick is the crypto MLO for these deals. So yeah, we've closed a few of those. So those are the scenarios where you would really want to be able to use this, something like that, not somebody who is, would not be able to pay the moment after they close.
All right. Jason has a question here for the reserves. Is it escrowed or the borrower just needs to show that they have enough?
Yeah, as in every loan, when reserves are required, you just have to show them as being available in the bank account. So you don't need to put them into a separate segregated account where you cannot touch it.
All right. It looks like that is it for the questions. Great program here, right? Definitely something that is unique, and I'm sure a lot of you did not know that it existed. And also, there is some preference if you are part of an underserved, community, that you can get better pricing, I guess. So, Jose, do you want to explain that?
Yeah, there are. This program is trying to serve underserved communities, and specifically, we're talking about uh, blacks or Hispanics. So, if you're black or Hispanic, you will get. You are considered CDFI eligible. So, when you would be on the portal setting up your loan, you would click the little box CDFI eligible, and that would usually give you a 0.25% lower interest rate, because that is the actual purpose of this loan. However, they cannot discriminate against anybody who is not in those two groups, so it has to be open to everybody. But if you are in the CDFI eligible category, you do get a better rate.
Perfect. Okay, well, thank you, Jose. That was great. Remember that we do this show every weekday at 11 a.m. Eastern, where we go through the different rates for that day, and we do a deep dive into a different topic like we did today. Now, today is another topic that we are very familiar with that most lenders do not provide, and we have over 300 loan officers all around the country. We're licensed in 22 states for primary and secondary homes, and we can do our business purpose loans like the DSCR that Nick showed in about 44 states. So if you would like an actual quote for one of your actual scenarios, you can visit us at themortgagecalculator.com, and we can pair you up with one of our loan officer consultants who can walk you through these different products and find the best for you. So thank you, Nick. Thank you, Jose. We will hopefully see you all back here tomorrow at 11 a.m. Eastern for our next show. Everybody have a great day.
Thanks, everybody.